familiar with. We have Darren from IPOR, we have Rob from InfiniFi, Vlad from Tau, and then, of course, Owner and me. How are you guys doing? What's your guys' current outlook on the market, given that maybe World War III has just started, or maybe this is going to turn out to be just a couple of days invasion and regime change, and then we're back to normal?
Yeah, it's not gonna. That latter part's not gonna happen. It's
good to have dreams.
It's too much of a quagmire at this point. It's not gonna end quickly at all. Market outlook though. Yeah, crypto's a good buy right now. Everything else probably not. I don't know. Private credit is looking really stressed right now. You combine the World War III events with the AI concerns on all these leveraged buyouts. It is looking a little bit shaky over there. And I say that as somebody who very much likes looped private credit and those sorts of assets. You got to be very discerning at the moment. Macro structure-wise, everyone's just scared. I'm sure someone can have a more technical analysis of it, but everyone is freaked out. Oil is probably going to $200 a barrel. We're not getting out of this easily.
But I mean, who could have foreseen these consequences? Obviously,
pretty much anyone.
Extremely well planned and coordinated.
Pretty much anyone with a brain.
I think a certain administration is kind of high off of the idea that they could just kidnap the president of a country and just get away with it. And they thought they could do the same in Iran. They clearly didn't put that much thought into how it works. Iran, for better or worse, they're quite decentralized as a country. The Assembly of Experts, their mandate is to name a supreme leader at all times. And it can be literally anybody from the country. It's a country of 92 million people. So unless all of those people die and the replacements die, they'll just keep naming other people. And the thing is, the Iranian economy they've been under sanctions for 40 years. So there's nothing to sanction on them anymore. They can tank really a lot of pain, both militarily and economically. But on the other hand, they can absolutely push oil to $200 a barrel. So I think we're going to see a lot of volatility over the next month, 2 months, 3 months. There's this, in one way, a cope. I keep hearing that Trump will just declare victory and leave, and then markets will be better again.
That won't fix it.
But exactly, Iran at that point, they can just choose to say
they're going to keep the straits closed.
What are you going to do?
The current leader's sister and his niece and his parents, like, what the fuck?
And his daughter.
What's going to happen? And
just one last point, I in no way have any love for that regime. It did a lot of horrible things, but what is happening now is only going to make it stronger. And I'll end with this. Before the war in Ukraine started, the one in 2022, the population was pretty much 50-50 between, integrating with the West or integrating with Russia more. Even with everything that Russia's done in Crimea and in the Donbass. And now it's like, I forgot the numbers, but something like 85% want to join the EU and 80% want to join NATO. It's kind of what happens when you bomb a country. You can't really... people tend to coalesce around their leader. So I think we're in for quite a bit of pain market-wise, but I agree with Rob, crypto's a great buy. We can tank volatility over the weekend, and it kind of became like a pre-market in a sense, where events that happen over the weekend, they're kind of priced in on crypto, and then that trend is followed when Asia opens, which then is followed by when Europe opens and when America opens. That's kind of what I've seen, so it's really interesting to see the 24/7 markets and prediction markets as well price in events, and then have that. There is also opportunity for arbitrage between that decision making over the weekend and whenever markets open. So a lot of volatility, but a lot of opportunity as well.
Have the developments over the past week and two overall made you more bullish crypto also for the rest of the year, or do you think no matter what happens geopolitical wise, we'll just repeat the bear market dynamics of the past cycles? So we have to be prepared for a little more downside for the coming months? Or is that something where you say, well, relative to other markets, this is making crypto look much more attractive. So regardless of expected price action, I'm increasing my allocations here.
I think it makes crypto look more attractive solely because, if you have to flee a country, it's much easier if your wealth is in digital assets versus in physical ones like gold. I don't think we see no more downside. I think we just see softer downside.
We're still in early innings. We don't know how this is going to play out. I would say if you say that we've seen the worst of it, possible, but there's so many different things that could happen from here. But I mean, typically, like if you go back to COVID shock, you had an extremely strong market movement and then almost V-shaped recovery and then a trek up, right? And that's, that's one possibility, but I don't think that we're in the clear at all. But I also agree with you that I think BTC is quite an interesting asset. I think that we don't see so much downside from here. We do have some cap downside, but yeah, I think in all the markets, I wouldn't say that we've seen the worst of it yet.
Wonder, what's your outlook? I mean, you're much deeper in the AI trenches, so like, would you say that crypto is, despite all the geopolitical volatility, it's just not the interesting asset class right now, or how do you look at it?
No, I think it is still an interesting asset class, but it is also clear that it's a niche. And I think outside of the bubble, there's like a lot of other topics that the world cares about, and I think crypto is none of them right now. But I don't think it means anything bad. I don't think crypto is dead or anything like that. I still think that trillions will come on chain. I just don't think it will be in the trenches or only DeFi necessarily. I think it will be more stablecoin regulated, boring stuff related. But market-wise, my feeling is that I also have not done any deep analysis on this, just from like gut feeling. I think it's going to get a little worse before it gets better, price action wise, but also geopolitical situation wise. Fun fact: I'm Kurdish, so we've been basically oppressed by every government in the region, whether it's like the Iraqi, the Turkish, the Iranian government. I think the Iranian Islamic Republic was amongst the worst. But I still don't understand how people can celebrate this war, especially when I see the diaspora celebrating. I think I also agree with Rob. I think it's going to be a very long, grinding, horrible situation for a while. And yeah, if you consider the whole Ukraine situation, I wonder at what point retroactively you will categorize this as a war that involves, a greater part of the world. And then there's this whole conversation of nukes, which I think is very scary, especially considering you have the US and Israel on one side. I'm still making up my mind. It's just like, it feels like a very, very weird time to be in right now.
I'm going to jump in on that. If there is going to be a huge amount of downside, it would come from like really one of two situations geopolitically. The first of these is that Iran successfully takes out a carrier, which would be the only thing that could cause the United States to choose a nuclear avenue. But honestly, I don't think that we would do that. That's not... The administration has lost the plot, but I don't think even they have lost the plot that much. I do think that if you get enough saturation from the drones and the various other avenues that Iran is currently hammering Tel Aviv, you will eventually cause Israel run out of interceptors. And at that point, there is a real possibility of nuclear weapons being used. That would cause the markets to collapse. That would be incredibly bad. I don't know if I can quite capture how bad that would be.
Did you see the poly market on the use of nuclear weapons a few days ago that they took down again?
Nothing spells end of times more than betting on when we're gonna die.
Well, I mean, I've always been a fan of buying geopolitical dips because, like, especially I think that poly market was the kind of culmination of this entire thesis because, like, if there would have been nuclear annihilation, like, we really don't care about the prices of assets anyway. So, like, the only bet that makes sense on that market is that there is no nuclear war happening. Because if there is nuclear war happening, like you'll probably be nuked away anyway.
I actually don't agree with you. I think there is a world in which nuclear weapons are used, but the world doesn't end. I don't think that's a good thing. I think that's really, really bad. But if you're talking about the either strategic or tactical deployment of nuclear weapons by a nuclear nation against a non-nuclear nation, unless Russia or China decide, okay, time to have fun, that doesn't necessarily trigger a nuclear Armageddon. That just makes things a lot messier, a lot worse. But I don't know if I fully agree that means the world's over.
No, you're on point. It's only American doctrine, and only the fact that we always see nukes mostly in American movies, with the idea that if a nuke is launched, everybody launches them at once. Russian nuclear doctrine very much states that you can use tactical nukes in a war without deploying all of them. The Chinese have kind of the same doctrine, and they only use them defensively. It very much is. It very much is possible to have World War III, and we just have nukes flying here and there. As awful and horrible as it sounds. But yeah, I agree with Rob.
Any of the Iran or geopolitics related poly markets that you guys currently find interesting?
I'm still mostly in stables, man.
Same. Stables in BTC and ETH.
I got a little bit of ETH now. I need to go buy some BTC. I'm just chilling. This market is too unpredictable for me.
Do you guys like how do you guys think that will affect the rate environment in DeFi yields? You can also use that as a transition to talk about your guys' newly launched vaults and what you guys are currently working on. But
right.
I mean, we've been seeing yields compressed over the past 4 months roughly. It's gotten really bad over the past 1 to 2 months. I also see it in the DeFi dojo, like. Whenever I do the market summaries there and read through all the chats, I don't think there was any week in 2024 or 2025, no matter how dire the market conditions were, where people were so like disengaged from the market. I really hope it will come back. But yeah, what's your guys' outlook given that you are active in the yields markets day by day?
There you go.
Well, I mean, if we think about DeFi in general, and we talk about crypto assets as a whole, if you're a OG Bitcoiner, you would like to say that it's a flight to safety, but the reality is that it acts much more like a risk asset. Risk on, risk off. We're very much in risk off right now, where people are flying to, fleeing to safe assets, right? So that's why we see cash. That's why we see gold. That's why we see gold running and not necessarily BTC, right? So a nice trade, if you're in pair trading, has been, long gold, short BTC, for example, or, over the weekend, long liquefied natural gas and other energy assets and short BTC. And then DeFi yields are all a beta to the asset prices. In DeFi, what do we use money markets for? To get leverage. So everything is a beta to the crypto prices. So in risk off, obviously we'll have a shrinking of yield, right? Even talking about Athena is derived from what's the risk taking in DeFi, and then the DeFi native rates are the same. So the fact that you can always find some looping yield when you get cheap debt in DeFi, then you can also loop it, right? So when you have compression, you always find assets. If we were talking like 1 year ago, people were talking about leverage looping in DeFi for treasuries, which were a very kind of forward-thinking thing. And I said, no way. Treasury is earning 5%. Now, if you give 5% on chain, people will eat that up. So there's always a trade in DeFi. It just depends on what you kind of where we are in the cycle.
I would say, at least from my perspective, I think I very much agree with Darren. It has to do with where we are in the cycle. There's the speculative premium that comes and goes, and right now it's gone. It's completely gone. Athena is very much, I would say, our market's beta in many ways, because the basis trade is one of the most DeFi native forms of yield. It represents the cost to borrow effectively. And right now, the cost to borrow is extremely cheap because people don't have a lot of faith these assets are going to go up in the near term. So rates are compressed to, well, disgustingly small levels. Personally, for us, I mean, I'm very glad that we, with InfiniFi, we've been diversifying our portfolio. We've brought a bunch of off-chain assets on-chain, a lot of CeFi lending, so longer outlook things like Maple or like FalconX, where we're able to get 5.5%, 6.25% lending to institutions who want to borrow against Bitcoin. And then things that are completely decoupled from crypto, like our deployment into Fascinaris M Global, their GDADF. And that is a relatively short-term fund. I think the average tenor of those assets is about 107 days. It's just trade receivables. So hopefully global trade doesn't get impacted too badly. I'm still pretty bullish on all this shit from China needing to get delivered to the United States. I think that's probably going to keep going.
It's not like trade receivables are impacted by shipping routes or energy
I'm
costs.
aware of that one. Well aware of that one.
It's not like it's made of oil.
It's mostly Europe and LATAM. So ideally, they're not having to go through the Straits of Hormuz. But I'm not saying I'm terribly thrilled about. Anyways, because of the diversification, though, we've basically been able to decouple a certain amount of InfiniFi's yield from the current state of DeFi, which means that I think we're yielding somewhere around 5.5% on SIUSD. I'm pretty happy about that. For a naked yield, that's pretty damn good. I was watching the rates on the TAL leverage vault over the weekend. We were back at 10, 11% most of the time. I think we're a little low right now because Auto USD is doing their weekly rotation, but should be back up there in the low teens, mid-teens, fairly soon.
It's been a lot of coordinating on what amount of leverage we do for these strats, and they've started to be much better over the past week, especially with the diversification you guys are doing. I am super bullish on the RWA diversification that InfiniFi is doing, and generally on RWA diversification in the space. I think we need, in order to mature, we need more off-chain yields to come on-chain. But just on the last point on Athena, because it's something we've been working on for the past 3 weeks, there has been this, if you've been active in DeFi for many months, you've occasionally heard of the famous Athena loop. We just launched last Friday or Thursday it was, I think. I don't remember. Darren knows better because it's on his platform. We have launched the mainnet version of the Athena loop. It's performing honestly better than we modeled it because the Athena loops are higher than they were a week ago. When we modeled it, it was at about 6.5%, and that's what you have in the prospectus if you read it. But the actual spot, if you can press on spot max, it's about like 12, I think. And we will also be launching the Plasma version in a couple of hours. So stay tuned on that as well. Athena are also going to be incentivizing this on Ink and Mantle. Those will be following in the next weeks or a month and a half. Back to what Rob and Darren were talking about, there is always opportunity. And a very wise man once told me, if everybody's screwed, nobody's screwed. So even in a bad market, there's always opportunity to find. With rates being these low, as long as you find an asset that can yield well, you can loop it up and have a much more stable loop. That's why RWA looping has been so discussed at Denver, at least from what I was told. Outside of looping, that's not the only strategy that you can do, but specifically now to have consistent double-digit yield from RWA exposure that InfiniFi has, or from Avicenna loops in this market, basically just set and forget. I mean, there's really very little compares to this. So yeah, but stay tuned on the marketing efforts for both the mainnet version and the Plasma version coming in the next couple of hours. And yeah.
What is your guys' view on the likes of Ink, Plasma, and Monad? Do these new chains stand a chance to attract TVL in the mid to long run, or is it basically just a short-term and opportunistic game of who's having incentives running hot, and as soon as these are running out, most people will leave again?
Can I start? It's just 30 seconds, and I have a very, very strong opinion on this.
Sure.
Incentives are a means to an end. People often treat them as they are the end itself. And there's been no chain, as far as I know, that has only ever lived off of incentives and nothing else. It is perfectly fine to have a budget for incentives and approximate that they will last 6 months or a year. Get as much TVL as you can, understanding a lot of it will migrate once other opportunities come. But in the meantime, if you manage to build something else to have as much of that liquidity be sticky, then it can stay. I honestly like what Mantle is doing with their effort. Ink, I am a bit less of a fan of their direction, because they're trying to fork every protocol instead of just incentivizing to bring them on board. This is just my opinion. Again, very happy to do stuff there. We're very happy to support the Avicenna loop on Ink soon as well. But yeah, incentives are a means to an end, and as long as the foundations understand that they will run out and that they have to have a good basis of protocols and products to offer, diverse enough from others, then everything is fine. I think, and we talked about this, Max, an episode or two ago, InfiniFi arguably did one of the most elegant transitions in crypto. They went from a restaking protocol to effectively a neobank, and nobody had any issue with it. They did it in such a seamless way that they're coasting very good now. I don't think a lot of people are annoyed from the points programs that they did. So yeah, that's my shorter take. Rob, you wanted to jump on? Sorry.
Well, I was gonna say, I wish you told me about this this Avicenna loop before I went and sold every last bit of USGE we held last week.
I did. We talk every week, man.
I don't remember this. I think we discussed me selling to you. I didn't realize I could get in on it.
Yes, but that was for the loop, and I said that I don't need it. I just need it from live markets.
Should have given me more details. We would have held some Athena. I got to say, I liked the asset. It was just it's been doing like 3%, 1%, 2%.
They're a victim of their own success. The basis trade has been awesome.
Exactly, the basis
being so competitive
so
that
monetized at this point. It is so well monetized. But yeah, in terms of like these chains, I think they have good core narratives. Right now, I don't think there's anything there except for the incentives. If they are able to execute on their visions, like Plasma, they want to become a stablecoin payments chain. All right, you have to attract DeFi protocols who are going to be doing payments and then allowing people to fund those payments. Like that's part of what the Fast and RGDADF does. Is they're funding like the merchant point of sale terminals, that sort of stuff. You let me do that directly. That's really cool. I'm interested if Plasma's doing that. But you need those sorts of receivables. You need the guys over at Ring with their credit card receivables, for example. That stuff's really cool. Get me that on chain. Get me that on Plasma. That is what Plasma is supposed to be about, isn't it? That's how you monetize payments, is you allow financing on them. So for them to succeed, they need to follow through on that core vision. If they can't follow through on that core vision, they'll die like every other L1 and L2 that doesn't have a unique differentiator has. If they can, they're really well positioned to take advantage of that. They are Plasma in particular. They're the tether chain that won out. Not to throw too much shade at Stable, but I mean, yeah, I think it's self-explanatory.
We've for example, we've always been as a team very reluctant to build on a new chain because of staying power, right? If we see Ethereum, people that tell you that Ethereum is expensive and gas, they haven't done anything on chain for years, right? Right now it's ridiculously cheap. I built and tested one of our products, like an Intune linear optimizer, and I think that in total I spent, less than $1 getting everything up, from deploying the Vault Factory smart contract, doing multiple administrative roles to. So, that tells me that, like a lot of these L2s from a narrative of being cheap or scaling are not going to play out because there's so much focus actually by the EF on scalability at the base layer now, which it was actually originally pushing off everything to L2s. Now it's really focusing on scalability at the base layer. But if you have a funnel, so the reason that we think that L2s only survive on incentives is because we're thinking from a DeFi native mercenary capital lens, which is very adept at crossing chains, at farming rewards, at, basically I consider most of this is like locusts. Go, you eat the field, then you fly off and eat another field, and then eventually everything comes back to mainnet. But if you look at something like Ink, if you look at something like Base, if you look at anything that, or even like Arbitrum's roll up with Robinhood, I'm quite bullish on this, as Rob said, if you can execute, because you have a different user funnel, right? You're trying to actually build your own captive, not captive user base, like captive capital that works inside of its own ecosystem. And that is probably going to be less interoperable, or wanting to go cross-chain to take advantage of a lot of these incentives. You have a different like user funnel, like turning bank deposits into on-chain stable coins to actually perform activities, rather than trying to siphon from this like DeFi native capital. So anyone who can do that very well and at scale, taking exogenous assets to the blockchain and bringing them on chain and making good use of them, I think is going to do well. Who will be that in the end? I'm more bullish on the ones that are connected to exchanges or different capital funnels, but we'll see. We'll see how it plays out.
Do you guys think that even if we are able to grow the total capital base by bringing in a bunch of RWAs, that some of the tokens of these DeFi platforms, let's say Pendle, Morpho, Aave, so like the lending markets and the derivatives on top of that, some of the DEXs, will they be able to capture some of that value to themselves and like finally go up in price again? Even though, I mean, I would say arguably like many of the behemoths, including InfiniFi, have done a very good job over the past years in terms of growth and like establishing themselves with partnerships on the BD side, both on TradFi as well as with large curators. But these tokens really have been down only in most cases for the past 24 months, to be frank. Is there any path to recovery, or are you saying, okay, you can basically have on a pair trade where you are very long the actual use and the utility of these products, but you're still short their tokens?
And you ride something down far enough and it has fundamentals, then sometimes you end up in value town. It's an inevitability. So I would assume that some of these become very good buys for long term.
Maybe speaking of the like application side of things, do you guys think that the past weekend, where HIP-free oil market served as the weekend price discovery vehicle for oil futures, do you think that this has lasting power, or is that a one-lift phenomenon because of the geopolitical tension this weekend? And I mean, HIP-free will play a role, but not really grow that much.
I think it has lasting power because it doesn't. There's no alternative to trading over the weekend. By the time someone else catches up, this has already become the adopted standard, which is very powerful in the traditional markets.
Yeah, sometimes Ethereum has been leading all markets because of DeFi. I mean, markets that basically never shut down. Not necessarily because it's the greatest asset in general, but literally because it has markets that have no central authority, that have no overnight, no closing hours. It's leading everything because it's 24/7. So I think it absolutely has staying power. And I mean, this is like when you take the genie out of the bottle, you can't put it back in. So this 24/7 market is a blessing, and it's a curse. I know it's a curse. I know that probably each and every one of us here has had sleepless nights exactly because DeFi trades around the clock. But traditional markets will also have to adapt.
Yeah, it really seems like Hyperliquid and also the Hype token is one of the very, very few things where people still have conviction into, from a like both directional perspective, but also from a user growth perspective that is visible on the end user and retail side of things. Whereas most growth verticals in DeFi right now appear to be more of an institutional nature and a bunch of liquid funds and some of the power users that have still been sticking around from the past years. I think another notable development of the past week has been the governance drama over at Aave.
Yeah.
So since all of you guys are very active on the curation side of things, and like you are every single day looking at the base layer of DeFi, do you think that Aave is maybe in the mid to long run going to lose its crown as the largest lending market and will be overtaken by Morpho, maybe Euler, or some of the other ones? Or what is your perspective on the competitive lending market landscape right now?
Let me jump on this since I spent the last 5 minutes fixing my audio. Um, the thing with the space, and I think I discussed this with
Yeah,
you.
I mean, I think Aave has weathered multiple cycles, built up a very large treasury, and it's useful exactly because it is, like cross collateral. So that gives it huge utility. Where Morpho is a different beast. Morpho is isolated. There's things that I love about Aave. There's things that I love about Morpho. There's things that I dislike about both from a technological perspective, right? But I think that Aave definitely hasn't done itself a favor by really jettisoning some of the teams that are I would argue are most responsible for its kind of ongoing success. And we can see that, like, even if we look at let's take another example where we have something like Bitfinex and Tether. It's this kind of structure, and companies have existed over a long time, now more than a decade. And it's not necessarily the original founders that actually make Tether successful. Everyone knows Paulo, but Paulo wasn't one of the original founders, but was the person that's really holding the torch and keeping it going. And I was actually moved from CTO to CEO. So it's not all, and this is also the same cycle that you get in startup, right? The risk takers, the pioneers that you get at the beginning aren't necessarily the one that add stability and long-term success. And I can't see, I don't see that Aave as a protocol, as a community, or as a DAO has done itself any favors by jettisoning off some of its most stalwart curators, and the reasons that it's had the staying power. So it probably opened up a lot of room from competitors, but Morpho is not, I would argue, it's not a direct competitor to Aave. They're different beasts. I think Aave V4 is probably much more directly competitive with Morpho, and I think that Morpho has done an absolutely fantastic killer job of doing this DeFi mullet strategy. Right, this is really where they are, executing like crazy.
The Coinbase
So
distribution angle.
they're different beasts.
Yeah. As somebody who likes, who has a decent amount of Lend Borrow, well, a significant amount of Lend Borrow on Morpho. I think we're the third largest stable backed market right now. And yeah, shout out to you, Vlad. Thanks for, and Darren. Thanks for helping us get there. But as somebody who, wants to have his asset on Aave as well, I can't have a strong opinion about this one way or the other, at least not publicly. I do think drama's never good for anyone, and I'm sorry that they had to all deal with this.
But that tells you also, I mean, so Rob, I mean, even that tells you that you see Aave as kind of the, the promised land. So that's
they have the deepest liquidity.
Deepest liquidity. You can do cross collateral. You can source. These loops can be even more profitable, but it's a very hard barrier in.
A legend. It is
a
true legend. Serap's tapped into that. It's my goal for InfiniFi to also tap into that.
And if the criteria softens, it won't have that same draw. It won't have the same like kind of stalwart construct. So let's see what happens.
I think the criteria softening is less concerning than if the liquidity depth decreases because of the criteria softening.
Yeah. I mean, that's
the second order effect that concerns me more.
And go hand in hand.
Just one question.
To me, that is the best way to facilitate my biggest growth ambitions. To me, deep liquidity on either Aave or Morpho, well, both really.
Why not both? That's what I wanted to say.
Yeah, exactly. It's a huge component of InfiniFi's growth strategy. Like, I haven't talked about it much, but one of our big plans for this quarter, this year, is RWA liquidations. We're uniquely positioned to pursue this instrument set because we can warehouse duration for these assets. So take something like GDADF. We already hold 25 million of it. Okay, if that comes up for liquidation, I can get a 5 to 10% premium on that, liquidating it. No one else wants to hold it. Like market makers, they won't hold this stuff because they can't hold it for, more than a week without having huge cost capital. The funds are the ones running the loops in the first place, so they don't just have free cash lying around to do liquidations. InfiniFi does. So we show up, we perform the liquidation, we warehouse the asset on our books, and we pocket a nice fat premium. And most importantly, we become strategically important to these lending markets to be able to facilitate these sorts of loops in the first place. Because if they don't know they have a buyer of last resort, a liquidator, they won't increase the size. And that's the beauty of the positioning we're putting ourselves in. Because at a certain point, giving us deeper liquidity gives them greater growth potential. And it's a positive feedback loop.
Rob, we need to talk about this.
I'm more than happy to talk about this, Darren. This is my bread and butter right now. I've been having these conversations for nearly 9 months.
I mean, Rob, we talked about this over at ETH Denver quite a bit, but what would you say are the most interesting RWAs to get on chain right now? I mean, we've seen some cracks and concerns in the whole private credit industry. So, I mean, of course, there is to some extent an adverse selection going to happen because crypto capital is very starved for returns. So if I was a TradFi issuer, I might find more
unloaded on retail,
like worse risk reward assets on chain than I find in like more sophisticated traditional markets. But what do you think about the current growth trends in RWAs? What is going to outperform in terms of growth, not necessarily in asset appreciation going forward, and which protocols are best positioned to capture that?
So Figure is actually really well positioned to take advantage of the Helloc narrative. Crypto turned me on to them from Dojo. That guy, yeah, he knows a ton about that stuff. It's impressive. And I'd say that's actually much safer compared to some of the private credit stuff. I do think private credit has its place, properly priced and properly administered. It still has a place here. Perhaps not as big of one as it did, a month and a half ago. I'd say receivables are my favorite thing. I love receivables. I think they're perfect for this industry because they are small ticket items. You're talking like 2 to 10,000, maybe 50,000 a piece, generally speaking, at least. They have relatively short tenors, usually under 6 months. depending on the receivable. Invoice receivables are like a 1 month. It's actually incredibly rapid. They have high interest rates, like invoices. I think the rates are between 12 and 24, even here in the States, 36 to 48 overseas. These are some gargantuan rates. And because you can buy a ton of them at once, you diversify like crazy and you end up with a relatively low default rate. They're also pretty recession proof because, yeah, the small business still has to get paid. It's you can lose a chunk, but you won't lose all of them. And so it's a lot less risk than funding, one really big leveraged buyout of a SaaS company that's about to go tits up because AI replaced everything it does. So I really like receivables. I think that's going to be where this goes. I think that's the most natural origination point for true on-chain debt because stablecoins already exist as payment rails, and all you have to do is add an additional funding layer on top of that. But I'd be interested to hear everyone else's thoughts as well.
Did you guys
They're
read?
good until they're not. I mean, until a major macro event surfaces like now. I mean, this is the big thing. And it's also not going to be the quality, the highest quality assets that are going to make their way on chain first. And this, I think that we have a poor specialization inside of DeFi. I think there are very few firms that can actually analyze this risk. And I think that, but I mean, the other thing is the lines between TradFi and DeFi are blurring, right? We're going to get a lot more like, private credit specialists that are going to jump into DeFi curation, and they'll be able to separate the, let's say the less quality assets from the others. But yeah, it looks good until you realize, like, I have my own portfolio in 2021. I started. It was all in emerging markets debt, and I got hammered by NPL and currency risk, right? And that was a nice foray into understanding why the rates are so high. So, yeah, I mean, it's all kinds of it's the asset. It's usually the first assets. Actually, this has been the whole timeline of like security tokens to RWAs. The assets that don't need liquidity, they're not going to be the first to migrate on. The assets that are going to be the first ones to make the jump, and it's usually the more questionable kind. And then you'll eventually have this like inevitability switch. So this is why, like, I think RWAs, it's a very good time right now because tokenization is very widely accepted. The technology is widely available, and now the more quality assets can be tokenized much easier. But they were never looking for the liquidity; they never needed it.
There's also the.
You have to go out with your own DeFi capital and find the quality assets, basically. It has to be active external outreach rather than just looking at what's naturally coming on chain.
Yep.
Like, for example, the GDADF was not on chain until we were talking to Fastenar a ton, reviewed their books, and said, hey, what's this one here that's your biggest fund, has never had a drawdown, and also happens to have the lowest return in your portfolio? Like, oh, yeah, that's the flagship. Why is that not on chain? Well, we never really needed to bring it on chain.
Are you guys able to hear Vlad? Because he's been trying to. That's weird because I can hear him perfectly fine.
Can you say something?
Yeah, can you see
I
me?
can hear you. Yeah, I can hear you.
Darren can't hear me, can't see me.
Sorry, Vlad.
No worries.
I was wondering why Darren just suddenly started talking over Vlad.
Yeah, I was wondering about
Since I thought we were such good friends.
Okay, let me reconnect.
Just one point on the RWA. Going on what Darren said earlier, I think crypto is definitely going to be sort of a way for RWAs to get investment capital, at least public. You come in and you bring in yield in a space that is yield starved, and in exchange, you receive cash. Now this starts off slow, a lot of retail, but then it started going on a lot with funds, and like we see much bigger funds coming in and doing just this. Fastenar at this point, a good chunk of their business is RWAs, which is really interesting. Also at Tau, we're cooking something that has a lot of tie into this, which you guys will hear about in a couple of weeks, maybe. Definitely managing duration risk and solving the duration and liquidity issue for RWAs in crypto is the biggest problem. And whoever can solve it easier, whoever can solve it the easiest or just easier, is going to have a very, very big advantage going forward. I don't think it's a zero-sum solution. I think it can be solved in many ways, and risk and duration can be managed in different ways for different portfolios and appetites. But this is what I see like the next big issue to solve in DeFi, and it's one of the last big hurdles to cross until I think we're just going to start having an actual floodgate of assets and tokenized businesses just coming on chain. I hope you heard me there, and at least the last part. It was the first part was intelligent as well, I think.
I heard you. I'm sorry, I didn't.
No worries.
Are there any other significant trends that you guys are seeing that we haven't covered in today's roundtable? Maybe also related to AI and agents. I think I'd be very curious to hear to what extent you're able to use it in your day-to-day work. I mean, we don't need to have the whole like, will AI manage our portfolios discussion again. I think we've had that a couple of times before, but more in terms of like, to what extent are you able to utilize it to lever your own work?
Three letters, CRM. I fed it a lot of my Telegram. And in feeding it a lot of my Telegram, it now understands. I did local processing for those of you who send me telegrams. So none of this stuff ever touched Claude or ChatGPT. I have Llama doing categorization on my behalf. Basically, it understands who people are, and it puts them together in a database and says, here's how you know this person, they know this person, they know that person. These are the relations. And that gets really interesting when you want to, query about somebody, or you want to query about how to get connected to somebody, or you want to understand what's going on in a complex system where there's a lot of moving parts. That, to me, graphing your own social graph, understanding how you're connected to people, and basically offloading your own memory to a computer, that's really cool. That's a really useful thing for my BD. That's a really useful thing for me. And I'll say I got the idea from Mark Zeller. He actually sent me a pretty in-depth piece on how he's done this, and also sent me the analysis of InfiniFi, which was just incredibly impressive. It knew people I was talking to in Aave that I'd never told him I was talking to in Aave. It just somehow knew that, because I assume he fed it a bunch of information as well. That, to me, is where this gets really interesting, is being able to make better connections, better understanding what's going on in a complex organization, who's talking to who. So yeah, streamlining connections, information aggregation.
How about you guys?
I
Vlad
can't be
and
the
Darren?
only one playing with an open claw. Come on, guys.
I haven't used OpenCloud yet. I was still too paranoid about like any data leakage. I'd have to look into it a little deeper, how to like actually restrict it. And
do not install it on a laptop. Do not install it on a computer. Install it on a virtual machine that you have, entirely sandboxed away. Do not give it real important, like terrifyingly powerful data.
We have one of our devs described AI as an incredibly talented bipolar child.
Yeah.
In terms of skill, in terms of maturity, in terms of behavior. So
the idea is that you hear some people say that eventually we'll have an AI agent Vlad from Tau using an asset from AI agent Rob from InfiniFi on the AI agent platform made by Darren from Fusion. And like through magic, the bot is going to know ahead of time what dependencies it needs to build or stay on top of them. And then you just deploy it and you don't do anything and it just trades for you. I'm generally a bit more, I always get flack for this. Like we use AI at Tau for research. We use it for our visuals. We use it for our own tools. We use it to do a lot of modeling for borrow rate performance, for how assets and strategies are going to perform. But like that's it. I wouldn't give it. Like we barely give our bots for our strategies enough freedom until we test it again and again. I just wouldn't give that to a bot for like just give a complete reign on parameters. There are the trick to managing assets generally is the first thing you need to do is make sure that you don't lose money before you start making a profit, and make sure that you don't break stuff that already is supposed to work a certain way. And you guys saw the Moonwell thing, I think, where they vibe coded, I don't remember what, and they didn't even bother to check the ETH price that the AI put, and it was like it was CB ETH, and instead of it being $2,100 or whatever it was back then, it was like $1.27.
They coded it to $1 instead of 1-to-1 with ETH. Yeah, I saw that.
Yeah, and I mean, in the end,
That's real code.
like in a world of people and competitors vibe coding stuff, be the person that actually does hard work and make sure the code is good. I think the hype around AI has gotten like, extremely high, and we are expecting these models to do a lot more than what they're capable of doing today. I am sure in 6 months or 3 years we'll have this where agents will be able to connect with APIs and connect fuses to markets and trade. You just talk to a person, and yeah, that's going to be very cool then. But it's not something that is going to happen overnight. How I keep hearing for the past like year. Yeah, Rob, you have your hand. Go ahead.
Yeah. So I'm not going to name anyone, and I'm pretty sure my investors aren't watching this, so I'll go ahead and share this. We had one of our investors, and I love him. He's a really smart guy, really good dude, very excited about what we're doing. He was showing us this model that he'd built of, how he thought we should make some changes to our UI. And he's like, oh, just go ahead and implement it with Claude. Just it's so easy to iterate on things today. Just tell the AI to build it and push it to prod. And I'm like, this UI handles tens to hundreds of millions of dollars pretty regularly. I'm okay with AI for a lot of things. I'm okay with it for connections. I'm okay with it for code reviews. Like, do a quick code review of what the devs have done and flag anything that comes up. And then the devs do their own code review independently. We get 2 sets of eyes. Good stuff. Creating code out of thin air for a production system that is actually critical infrastructure, that's a little bit too much. Like our stats page, it's AI built. That's fine. The stats page is a stats page. It's read-only data. Actually changing things that can write to chain with AI is a bit of a bridge too far, because now you're trusting that whatever it did is actually not going to, somehow result in somebody losing $100,000, $1 million of cash. I don't think we're there yet. I think it's very good at a lot of stuff, but I wouldn't trust it in that role.
Yeah, I think I saw it on the timeline. I think it was yesterday, where despite the 5.4 model of GPT, occasionally it is still making some really weird mistakes in basic logic. There was one guy who was like, I want to take my car to the car wash to wash it. It's only a 2-minute drive or a 2-minute walk. Should I walk or should I drive my car? And the AI told him to, yes, just walk over there, because it's just a 2-minute walk. And it totally neglected that he's going to the car wash to wash his car. There was another thing with like which number between 1 to 800 has an A in it, and it was like coming up with these random answers just to serve the prompter's confirmation bias. So yeah.
That's the main problem with it. I heard Terence Tao talk about it, saying that it's not so good for advanced math because it can only be trained on information that already exists, and it can't really conceptualize. And it feels obligated to give you an answer, even though a problem might be so difficult, you need to solve it for months before you have an answer. So they are a lot more limited than what we think. And Max, I saw that video with the example of the car wash, and the guy spent 5 minutes arguing with the model to bring my car so I can wash it. So yeah, it goes to show.
This one I saw the other day, it wiped an entire prod database.
Oh yeah.
The whole thing. Dude was trying to migrate his like 2.5 years of work, and it just zeroed. I think they restored it from a backup, but still, this is, yeah, it's good. It's not that good.
Yeah, I do think it will get to a point where the excitement is less around the tools, but actually what people are building with it. I do think that there's a lot of like, fascinating stuff being built, or like being offered and like possible, but I really haven't seen anything being built with it that solves a lot of problems. There are some occasional like tools or databases or whatever that serve a purpose for a day or two, but then they kind of get out of fashion really quick again.
This is AI built. This whole site, I will say that, like, this is something that all of our users love. 100% AI. Few stylistic changes lately, but we just gave it the API endpoint that we had all the data on and said, "Hey, build a dashboard."
I'll tell you some like non-critical thing for our own internal AI policy is that we don't sign up for any annual subscriptions, because there's a good chance that by the time someone gets comfortable with something else will be launched and it will be much better. So we're doing month to month across to everything because it makes more economic sense.
Just to jump on what Rob was showing, this is an internal tool we use. Instead of using Sheets to balance our lending optimizers, we built this dashboard and it does the same thing, better output, better CSV to feed our bots with graphs. This is also all AI made, but it's an internal tool we use to, manage markets and run scripts instead of just doing them on Sheets.
We have a policy here in InfiniFi where I give you a credit card as a dev, and you're supposed to go out and buy a subscription with it. It's like one of those business credit card setups where I can limit them to spend, like $200-300 a month at most. That way, people are always running little experiments. Decent amount of time produces nothing, but I've gotten to the point where our devs are just like churning out little bitty tools every now and then. It's convenient. It's useful.
Can I get one of these when we're at ECC?
Especially when we go out for dinner.
I mean, hey, how do you feel about a job? I'll at least get you some barbecue.
I hope we'll be able to make the EFCC meetup happen. Was amazing having you guys on. We're close to hitting the hour. If there's any last topics or any hot takes you want to drop, feel more than free to do so. And other than that, I'll be more than happy to have you on for the next roundtable.
I'll just let Vlad get midstream and just cut him off.
Exactly. Let me get mid-sentence and then cut me off.
Very rude.
Always great talking to you guys.
Great chat, lads. Absolutely great.
Was great having you all.
Talk to you guys again soon.
Thanks,
Bye.
guys.
Chat to y'all soon.